Good morning. It's a great day to be hanging out and talking about stocks this morning in the market. And hopefully you can see the disclaimer. And it says basically, if you wish to remain unidentified from the recording, please remove your name and face from the video. We don't have any crystal balls. Stock investing includes risk. Prices will fluctuate. You can lose money. You can do everything almost but get COVID by investing in stocks. It's dangerous. All stocks are speculative. And so just know that going in there. Life's a risk, actually. So if you're going to get up and get moving around today, something bad could happen. But we're going to take a look at stocks today in a way that can enable you to take hope and encouragement and curiosity in investing in the stock market. So I'm going to stop the disclaimer screen here. Hopefully that's all pretty helpful to you, and hopefully all of the sound is working really well at this point. It looks like it is. So we've been using three stocks, my first three stocks, to talk through different ideas, and we're going to just keep that going today and help you gather a perspective on the stock market. So today what I want to talk to you about is the trend is your friend. The trend is your friend. And so the first thing before you decide to buy a stock is see what is going on in the markets. Way back in the ancient days when stocks were first available to investors, there wasn't a marketplace for them. There were these positions of ownership that were exchanged amongst people. I think it was called the buttonwood tree in New York City, and they would hang out under that tree and try to negotiate how much to exchange shares would go for from one day to the next. And there wasn't really a good feel for the broader investors, the people that were just trying to maybe make a speculative investment. There wasn't a feel for what direction the market was going. So Charles Dow came up with this idea called the Dow Jones Index, and took a group of stocks, totaled up the values of them, and then divided it by the number of the stocks, and that's how you got an average. And so then he came up with the idea to track that average of the stocks to see if there wasn't a trend of the overall market rather than just the trending of individual stocks. And so that's how we came up with indices or benchmarks or indicators of what's going on in the overall market. So let's look at two or three of these real quickly and see if we can get an understanding for what's going on in those indices. And I'm going to start with the S&P 500. That's a common benchmark, and it is an important one to watch, I think, during markets in a normal time to see what's going on. Let's see here. A little slow on this sharing a screen thing, so I'm going to get that disclaimer out of there. And let's see, here we go. All right. I'm not sure why I'm looking at CrowdStrike investing right here, but let's go to the S&P 500. All right. So if the trend is your friend, we can just take and draw a line across the top of what's going on in the market to see if we can't figure out what direction the market's going. So back last fall, if we took and connected the tops here of this and just said, which direction is this market going? It'd be fairly simple to say this is an upward trending market. It was upward trending until it wasn't, right here at the end of, what month is that? End of February? Yeah, it's right here at the mid to end of February where it started trending downward. And so you've got this upward trend and then the downward trend right here. And so when this thing turned and started going downward, it became increasingly riskier as the days went by. And our encouragement during this time was to be cautious because this is pretty dangerous. And so that was a downward trending market. And right about here, this action that took place right here gave us an idea that this might be a chance to start taking your capital or your investments and get them working a little bit again and gradually work your way in. So we looked right here. We didn't pick the bottom because that's so difficult to do, but right about here we had an indication that real money was coming back into this market. So if you just kind of went from there until the 2nd of September there, you kind of had April, May, June, July, August. You had about 5.5 months there that were pretty smooth sailing in the market. And then September 2nd right here came along, and it was a big down day. And then we had this last Friday, this big sell-off that it ended kind of nicely, but we don't know what's going on here. We're taking a cautious look at this market, and it looks like it might have started a different trend than where we were. So we're not aggressively buying into this market right now. We might, that could change this week even. But to have an opinion what direction the market is going will tell you whether it's a good time to buy or hold on or even sell some of your stocks that you have profits in, or especially if you start seeing a downward going trending market, you don't want to hold on to too many stocks that you're already losing money on. All right, that's the current market. Let's go back to 1979. This is the market that we've been using as a kind of an idea of what to do with stocks. And let me get my bearings here on the exact dates here. So this would be September of 1979 right here. And so let's go back just to March and see if we can see what was going on before. So this would have been January of 1979 right here. And what happened right around here at the end of 1978 is the market did a little bit like what we've seen that we saw happen in February this year, and we saw happen starting in March, as you had this sell-off that started, and it started with bigger. These lines down at the bottom are the amount of shares that are exchanging hands, and so that was a big volume day. A lot of probably institutions like mutual funds and pension funds were taking some profits and selling out of that market, and so you went from 108 all the way down to 91 down here. So it's about a 17% drop that took place from that period of time. And then, so you had a downward trending market right here, and it really never hit a new high. The high, you could say this 106 or this 108 were the highs of this market. But there was no real just driving power to get right back in this thing. You could have used this date right here. The volume came in a little bigger. Let me see here. No, that wasn't the day. I thought it looked like that higher day. So you would have just kind of sat on this one for a while to see what happens. And then if we put this into later in the year, we came off of that right here, this decline. We dropped from 108 to 91, and it just traded sideways right here in a pretty kind of roller coaster manner. And so that would have made this market a little more challenging for you to make money, because you're going to just see it going up and down, up and down, up and down. Let's add another 3 months to this and see what happens here. Finally, it came through. Probably this day right here would have been a good day to get back in. You're starting to see the volume pick up dramatically and the market start coming up. You would have got back in this market, maybe got a little anxious after you had a 5% drop in it, but then all of a sudden it started giving you some encouragement to stay invested. Let's just flow through a few days here and see if anything picks up with this. So we're bouncing around the 110. It got up a little higher right there, 110, and it's just really struggling to find a direction, but it's trending upward. See how this line is going up here, and then all of a sudden Here we go. The institutions are selling off. That's not you and me selling that day. It's somebody big is selling. Something newsworthy probably happened that day and affected what was going on in the marketplace there in a dramatic way. And we may have just had that short-term upward trend disrupted in a big way there. I didn't pay attention. Yeah, see how we went downward all of a sudden? Those big days like that can just show you caution. You don't necessarily have to sell out, but they just say this is not an easy market to make money. It's going to give you a lot of volatility. You've dropped off 14% already there, and it's dropped below this black line, which we call the 200-day moving average. And this is a hard market to make money in. And this was the market I started investing in. I didn't have any idea between the relationship between my stocks and the overall market. And your stocks are going to generally follow what's going on in this overall market. So this is the S&P 500. In this short period of time, it's already had 12 to 15% drops. And that makes it really difficult to get a good feel for how to invest, because you're seeing your capital or your investment move in a lot of gyrations, causing you to wonder if you're making the right decisions. Guarding your mindset is really a challenge with this process of getting invested. And you can just see that this market has not been a steady flower, and it's going to be a harder market to make money. Let's see what the Nasdaq looked like in this period of time. The Nasdaq's where you're going to find your Google, your Apple, and things like that. That a lot of you are familiar with. And we'll go back to 1978 here. And so we had a trend in January of 78 that was just trending this way. And all of a sudden it finally began to shift and give you a period of time from June till the end of July where it went up a good 8% or so. But that's still not an easy market to make money, because then all of a sudden it gave it all back, went sideways for a while, downward again, and then you had another few days where it went up almost 9% here, sideways, and a drop. And so what you want to know is what's going on with this market, and is this market going to be an easy place to make money? So we're here at 100. I'm going to add it just a year and see what happened a year later. Oh, look at this. So the Nasdaq came above this 105 level. If we drew this line here, and then all of a sudden it changed character. Instead of being volatile like it was going up and down, it started to go up. And there would have been indicators, and we can talk about these in future shows, that would have encouraged you to start getting money invested in this cycle here. And then you had a flat period for a couple months, and then it continued this upward rally that gave you an opportunity to do pretty nicely there. That thing went up 40% in a very short order there, and that's the Nasdaq, which is going to give you a more traditionally a more roller coaster like ride there, because you can see that it went up that 40%, and then all of a sudden from this September high in 79, or yeah, it's in 1978, it dropped down another 30% back to 111, 110 here. And it didn't, this was much like the drop off we had in February this year that didn't give you any time to sit and think about it. It came off this 135.78 level, and the sellers just started pounding it like a drum, and that thing dropped off. And so what I'm trying to get you a feel for is that the overall market is going to have a big influence on the individual stocks that you have. And if you're going to trade individual stocks, you kind of need to be aware of what direction the market is going before you just jump in blindly into individual stocks. And so those two, the S&P 500 and the NASDAQ, can give you a feel for what's going on. Let's look at, so you see how the NASDAQ here was very straight up and then straight down in a short period of time. Let's look at that and compare that to the S&P 500 during that same period of time. It wasn't as pronounced. You see how the market doesn't look exactly the same on this one. So it wasn't as pronounced. And so what it tells you is the stocks that were in the group called the S&P 500 acted differently than those that were in the Nasdaq. Let me go over and see if I can't put those two on top of each other here. Okay, and so here's the, let me make sure I've got the right share for you here. You know, I'm a rookie when I'm doing this, so hopefully you're seeing a different chart now with both indices. This purplish looking line here is the Nasdaq, and the black line is the S&P 500. And so in this this is, I didn't switch it over. Sorry about that. Let's go back to 1979. Sorry about that, guys, gals. So these two, the purple again is the Nasdaq, and the black is the S&P 500. And you can see over here to the left of my screen, when this market started declining in 1978, that the Nasdaq dropped dramatically more, but when it started rallying back, it came back, got basically 5 percentage points more on your investment. Let's shift this back. I think I'm a little bit ahead of where, yeah, here we go. This is the section we were looking at individually a while ago. And so you had this kind of area over to the left of the screen where these two markets were traveling, pretty much giving you a similar return. And then all of a sudden, you can see that the S&P 500 started trending downward while the Nasdaq was going sideways. And then when they both started trending up in this little section right here, the Nasdaq was angling up at a much faster rate. It's same over here to the right. And so if you started with $100 in the S&P 500 at the end of this time, you had 107 roughly, and it was almost 132 that you would have had in the Nasdaq. So that's quite a bit of difference in the way that those two indexes worked in comparison to each other. So as you're considering your investments, take a look at what the markets are going to show you, the indices, and use that to help you decide whether right now is a good time to begin investing or not. Some of our curious investors had asked us some questions about the markets in the last couple weeks, and those that asked, we suggested that they use a trading tool called a stop loss. And with a stop loss, you can put in an order in the market below where your stock price is. In case the market turns on you, it gives you the opportunity to stop any further decline in your stock price and lock in some of those profits. And so those sorts of tools are available for you. Those are the things that can help you really prosper as you begin to make decisions, because as you go into the marketplace, you want to be very aware of what's going on all around you in the markets, as well as with your individual stock selection that you're going through. And so I think today this is probably a good lesson on what we have available to look at the market, and we can go in more detail next week as we look at maybe some individual stocks and their performance relative to the marketplace itself. I appreciate y'all hanging out today, and I hope this was helpful for you to get an understanding of how the overall market is going to influence your individual stock selection. Have a great day, and I'll see you guys soon.